You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back everybody to another episode of the Young Investors Podcast. If you're on the YouTube version, you might notice something different. We're gonna try record video, but to be fair, we're just talking off air. Maybe this might not go great, so it might actually still just be an audio podcast.
I hope it works. I hope it works flawlessly and that everything syncs up and all the audio and the video works, and it's just, you can see our wonderful faces now on YouTube. But I think this is going to be something we're going to try doing every week now going forward. We're going to try and just, now that I'm in the office and I can actually physically record myself while I'm sitting at a computer, let's just give it a go. Who knows, it might help us a little bit more on YouTube as well.
Yeah.
The YouTube side of the podcast. I mean, it really doesn't, if you listen to us on Spotify or Apple Podcasts, it doesn't matter at all.
No. Yeah. I wonder if there will be any different. Maybe we'll get a little bit more of the dynamic that we get when we do the in-person podcast. I'm hoping that we get a little bit more of that with the video.
Yeah, maybe. We are looking at each other as well. Normally we just Skype each other, but we don't have our video on. But now we've got video on, we've got everything. So yeah, I'm looking at your pretty face over there, and you're looking fresh, mate. You're looking fresh.
You too. We've both had a shower this morning before the podcast. Yep. I think that's not normally the case. So.
Yeah, we've got the hair done, we've got the makeup on, and we're good to go.
God.
So yeah, we'll see how it goes, but hopefully it works out pretty well. But what do we got to talk about? Oh, of course, we've got 13F season. So we've got, there's not really that much going on in 13Fs, which is a little bit disappointing this time around. But we'll still talk about Michael Burry, a bit of Monish Pabrai, Warren Buffett, of course. And actually, I didn't know that this was coming, but this morning I just logged onto YouTube and I saw that Charlie Munger overnight had sat down and done the Daily Journal annual shareholder meeting, which is similar. They run it similar to the Berkshire Hathaway meetings, where it's basically just like an extended Q&A with Charlie Munger. So I think it went for like 2 hours. Charlie Munger's a little bit more to the point and abrupt with his kind of answers, so he gets through the questions a little bit quicker. But there was still lots of little tidbits in there that I think we'll talk about that for the majority of this podcast. It's always good hearing from Charlie Munger. He's 98 years old, but it baffles me. His mind's still sharp.
Yeah, he's a trooper. Yeah, he can still grasp a lot of concepts. He can cover a lot of topics that went through a lot of different things: inflation, politics, and political environment. There's so many different things that he can kind of share his insights on. So. And the recall as well for like things, his investing history and that sort of thing is incredible. I can't even recall what I had for breakfast. So
rice bubbles.
Oh, that's
Cheerios.
Right. That's right. It was. Yeah.
What do you normally go for breakfast? Just out of curiosity.
I just have Weet-Bix. Yeah.
Weet-Bix.
Yeah.
What do you put on them? Surely you're not one of those psychos that just eats plain Weet-Bix.
Just Weet-Bix, no milk, nothing. Just
Weet-Bix. No,
go through half a box a morning.
He just pulls one out, starts chomping down.
Yeah. No. I have like, I don't know what it is, like just like a mixed topping, like a cereal that you put on top with like berries and stuff in there.
Oh, okay.
Like granola or something. I don't know what it's called. Yeah.
Whatever it is. Yeah. Okay.
Yeah.
Interesting.
What do you go for? What's your breakfast?
For the longest time, I've been eating this Uncle Toby's cereal. It's like peach cluster, oat and peach cluster things. It's pretty tasty. It's
I sometimes get that.
One of those kind of muesli-ish, sweet muesli kind of things. But sometimes I'll go on Nutri-Grain or a honey Cheerios or something like that just to to mix it up. But yeah, this is what do you guys eat for breakfast? Let us know in the comments.
If this is what we talk about when we put video on, we need to turn this off right now.
Yeah, that's true. We need to get back to usual. I feel like I'm very relaxed, like we're just in the same room at the moment, just having a yarn. But anyway, we'll get back to some investing topics. So Hamish, you want to go through the sponsor clip and then we'll get into it?
Let's do it. Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So basically, you can bring in all of your trades either automatically or you can enter them in manually by downloading them from Excel. Usually, you can export them from your broker. And once you do that, it will track all of the different types of gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do all of those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports now that can be used to track performance of your portfolio, diversity, that sort of thing, as well as use the tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So you can use that link, sign up to a free plan and track up to 10 holdings for as long as you want, or you can sign up to a premium plan and get 4 months off a yearly subscription if you use our link. And thank you to everyone who has used that link and is supporting the podcast.
Thank you very much.
All right, we should we're going to get
inflation.
We're going to get this inflation stuff out of the way. I know I joked last week about talking about it for half an hour. I promise we won't do that. That was a big joke.
Quick update. Because last week we were recording it literally just before we actually got the data. And we made some predictions. I can't remember what our predictions were. Did you write them down?
I've got them here. Yep. So, so last month's inflation was 7%. So we're projecting kind of what was it going to be for January year over year. You said 7.1 to 7.2%. So a little bit higher than the previous month. And I said between 7.2 and 7.4. Both of us were right that it was higher than 7%.
You were a little bit closer.
I was a little bit, but I mean, I gave myself a nice range. I was like, I was like 7.2, 7.3, 7.4.
It'll come in somewhere between 5 and 10%.
Yeah. Somewhere between 1 and 99.
Yeah. Who would have thought 7.5% inflation, hey?
Yeah, 7.5%. So the highest since 1982, highest in 40 years. So progressively throughout the year, we've gone highest in 20 years, highest in 25 years, highest in 30 years, and now we're at highest in 40 years. But keep in mind, inflation was measured differently back then. So it can't even make a comparison. You can use the old method and apply it today, but still that's not perfect because there's good reasons why things have kind of changed in the measurements. But you really can't go, you just can't compare it to the 80s because it was measured differently. And there was different data available as well at the time. The further back you go, when you're looking at any kind of historical data, there's just going to be less reliable data the further you go back naturally compared to how we measure things now. With most things at least. So I like to look at the alternative inflation measure, which is using the 1970s, 1980s measure. And if you use that, we're over 16%. So
that's mind-boggling. That's really mind-boggling, to be honest. Yeah. So it's kind of like a little asterisk, but just put an asterisk after the inflation data because that is just crazy that you can just change a couple things over time and then, decades down the track, well, it's actually, we say 7.5 and it's actually old method. It's like 16% or something. I've seen a lot of the finance YouTubers talking about that now as well. It's quite interesting, but kind of scary. Yeah. Kind of scary, 7.5%, but realistically higher. And things are getting more expensive, Hamish Hodder.
Yeah, for sure. The month over month increase was 0.6%, which was the same increase from December. On an annualized basis, that's 7.4%. So on a month by month basis, still very, very quick, certainly not slowing down. A lot of people were using the argument that the 7% rate we're seeing now is because if you go back 12 months ago, inflation was quite a bit slower. So you've got kind of that That it's like a peak comparison, but even on a month-over-month basis, we're still terrible. We're still at a very fast pace. So that argument doesn't really hold too much water. Core inflation, which excludes gas and groceries, still rose 6%. So excluding the volatile parts of the measurement, 6% increase. And the reaction was fairly to be expected. Interest rates on government bonds went up in anticipation for higher interest rates, official interest rate changes. The 10-year yield hit 2%, which is pretty high. I mean, it wasn't that long ago. It was 0.4% or something like that.
Zero.
Yeah, it was basically zero.
Wasn't that the clip in Warren Buffett's annual shareholder meeting from last year where he gets the little clip of the Wall Street Journal and he says for the 20-year bonds, they were sold at like 100.0000006 zeros.
Oh, yeah. No, because he's talking about the very short-term rate. But
yeah, he was talking about the 20-year.
But even the 10-year rate where you lock your money away for 10 years was like 0.4, 0.5% or something, which is kind of crazy. But it's hit 2%, which kind of puts it back to 2019, 2018 level. And then stocks fell as a result of it, which makes sense. Tech in particular was down about 5% on the day and then has recovered a little bit since then. So I don't know. That's pretty much it. Nothing overly, overly exciting or unexpected, I guess, except that it is still increasing at a high rate. But I'm not particularly surprised by that, at least.
Yeah, it seems like that was to be expected. All right, should we wrap up inflation talk there and move on to something else?
Let's do it. Let's get into.
Do you want to you want to talk 13Fs first, or you want to talk Charlie Munger at the Daily Journal meeting?
I don't know.
What's you feeling?
I think let's do the 13Fs because I feel like there wasn't a whole lot of activity, as is often the case. So let's go through some of these 13Fs before we jump into that. Do you want to take us through Buffett? Because Buffett was probably the most interesting out of all of them.
Start with Granddaddy, big buff man. So Berkshire Hathaway's portfolio is up to $330.9 billion.
It's healthy.
That's one way of describing it. That is a healthy portfolio. Pretty insane. They didn't do very much buying in this quarter too, so a lot of that's just returns.
Can you imagine
they've been getting?
Can you imagine the YouTube video he could make? I mean, you see a YouTube video that's like my $30 million portfolio, and everyone's like, "Whoa, this guy's a YouTuber.
Amazing.
It's $30 million.
He's loaded."
Imagine Buffett just comes out revealing my $330 billion portfolio, all zeros as well. Like
you'd run out of space on the thumbnail. You'd be like, "How many zero? I can't tell."
Dude, that would work. That would go well. He should do that.
Man, that would be insane. Although it wouldn't be a particularly interesting video because we already know.
Yeah,
it's yes, Warren. Maybe we saw that.
Maybe that's going to be the YouTube. Maybe that's what you should do when you talk about someone's portfolio instead of being like Buffett's portfolio. You should just be like revealing my $330 billion portfolio, and then just put his face on there.
Yeah,
could try that.
That'd be that'd be a pretty funny satirical video. Is like dressing up as Warren Buffett and being like the classic finance YouTuber, like Warren Buffett revealing my $330 billion portfolio.
Doing like 6,000 affiliate promotions in the introduction.
And make sure you sign up to Webull for 3 stocks. Anyway, so yes, Buffett, he does have a very healthy portfolio. We don't know how much cash he's got because we haven't got the Q4 results yet, but it's likely, if it's anything like has been in the past couple of years, he's likely in about 30-35% cash. An interesting kind of a crossover of stories when I was listening to the Daily Journal meeting this morning. Charlie Munger was actually talking about why that is, why he and Warren Buffett, they just have cash. And he was like, people say, we're trying to time the market. And he was like, no, that's not it at all. It's just a function of our strategy. And this is what we've been saying for the longest time as well. A function of the strategy is we just can't bring ourselves to overpay for businesses. Therefore, if there's a period of time where all businesses are pretty much insanely expensive, then we're not going to be able to sink as much money as what we'd like to in the market, and we're just going to accumulate more cash. So I feel like that's going to be definitely the case once again when we see the Q4 results from Berkshire Hathaway. In terms of the actual portfolio, they sold out of 2 positions. So they sold out of Teva Pharmaceuticals. And while we're on the subject of pharmaceuticals, it's been a trend for Buffett the last couple of quarters to be just he's selling down all of the pharmaceutical companies like Bristol Myers Squibb and AbbVie. And he's sold out of Royalty Pharma. And there's another one that I can't remember. But it's been a trend. He made kind of a broad industry bet like what he did with the airlines, and now he's kind of just backing out of that bet. So it's not surprising to see him sell out of Teva Pharmaceuticals. He also sold out of Sirius XM Holdings, which is a satellite radio provider in the States. So interestingly, they sold out of Sirius XM Holdings. They still hold Liberty Sirius XM, which owns 71.5% of Sirius XM, but they've actually ditched the Sirius XM. It's very confusing, Hamish. So make of that what you like. I don't know exactly what to make of that, but I mean, it was such a small little snippet of the portfolio that it probably wasn't even Buffett, so you probably don't need to worry about it.
Yeah, I mean, there was all of the changes really, even the 3 you're about to talk about are very, very small. You just look at the bulk of the portfolio and Apple is still 42% of it or whatever it is.
It's more than that.
Is it really?
47.
Oh 47, and then what's second? American Express or something?
Bank of America, 13.5.
Yeah.
American Express is third. Yeah, 7.5.
And so the bulk of the portfolio just doesn't change at all.
Exactly right. And we will talk a little bit about this in a second. I'll just go through these 3 stocks. But Buffett, I actually think when you boil it down and ask what did Buffett actually do in the quarter, the answer is probably not a lot.
Yeah.
But if we look at, Berkshire Hathaway's portfolio, of course, this is Buffett and Todd Combs and Ted Weschler. They're the 3 people that manage money for Berkshire Hathaway. There were still 3 stocks that were bought in the quarter. And interestingly, one of them, Liberty Media Formula One Series C. So this is, don't worry about the Series C. That's just a class of share. They just bought non-voting shares. But interestingly, Liberty Media, I think, breaks themselves up into 3 different sections. So there's the Formula One group, there's the Braves group, and then there's the Sirius XM group. And they've decided to buy into Formula One. So that's pretty much, they just attribute the ownership of Formula One to the Formula One group, and then the other groups have ownership because they have a lot of little businesses and stuff. Big Daddy Buffett's bought some Formula One. He's been watching Drive to Survive like the rest of us.
Took my line.
Did I? Sorry, mate.
Yeah, he's obviously been tuned in. He's obviously, taken back by the drama between Verstappen and Hamilton, and
Max Verstappen.
He knows this season is just going to be a ripper. That is pretty funny though. It is kind of mind blowing how much of an impact that TV series had on the sport.
Huge,
though, because for me it was probably never a sport that I would have just stuck on and tried to understand myself, if that makes sense. Like it's not really a sport you can just flick on and be like, oh, I kind of get the rules. Like, oh, umpire just blew the whistle for that. I can't do that. You know what I mean? Like some sports you can kind of get it. Whereas with this, there's so many technical things and things that happen off track.
Yeah.
And not everything even happens on the race day. There's the qualifying and the practices, and there's so much involved that you kind of need a show like this has got nothing to do with Buffett, but you kind of need a show like Drive to Survive to understand the sport before you can love it. At least that was my experience. So
definitely.
It's kind of mind-blowing.
It's like trying to get into Formula One is like just diving into the Formula One is just like diving into the deep end. It's very, very difficult. It's like, so many like little things like, the tires that you're using when you set your fastest lap in Q2 are the tires that you start the race on, and you need 2 different tire compounds. It's like, what the heck is going on here? So,
it's crazy.
But no. And it's one of those sports where you don't really see the athletes, you don't see the drivers. Like when you watch AFL or cricket, it's obvious you're watching the people. But when it's Formula One, the drivers are behind helmets, they're inside their cars. You can't talk to them. It's very. I think Drive to Survive has really done a good job in showing some of the people in Formula One, because I think and the stories in Formula One, which is done really well. But I mean, the show has led, there's no secret, it's led to a massive resurgence in Formula One viewership, and that's got to be good for the bottom line. So clearly either Ted or Todd thought that, you know what, why not? Let's have a little play, but it's only 0.04% of their portfolio. So it's like walking past a 5-cent piece on the ground. For Berkshire Hathaway. So then in terms of, so that was Liberty Media Formula One Series C. And then they also bought, here we go, Activision Blizzard, 0.29% of the portfolio. So again, nothing substantial. It's not huge, but there you go. Yeah. Activision Blizzard is, for those that don't know, the owner of like World of Warcraft and Call of Duty and Tony Hawk Pro Skater and Diablo, StarCraft. I'm missing a million of them, but all of the sub franchises off of Warcraft, like Heroes of the Storm and all those. But oh my gosh, this definitely hit me out of left field.
I mean, I don't know if you can convince me that there's no insider trading going on in that trade. Like they made the trade pretty shortly before the bid from Microsoft, which I don't know.
They did.
It's and that's you can't tell me they didn't speak to the management team and there wasn't something mentioned about potential takeover. I don't know.
Yeah.
I don't know.
I don't know either, but I mean,
maybe I'm cynical, but
Buffett doesn't strike me as someone who would do that. And everybody, I actually made a video on it because I didn't even think about the Buffett-Bill Gates friendship. But everyone's like, oh, Bill Gates, Microsoft boy, and did he
don't they play bridge? They play bridge every week.
Play bridge every week or something.
So we're putting a bid for we're putting in a bid in a month. So just load up.
Yeah. Do you make bets in bridge? Do you put forward a bid in bridge? Is that a function of the game? You can be like, I'm going to bid this much, just like the amount I'm going to bid for Activision Blizzard next Tuesday.
I've said too much.
Whoopsie.
And another large donation made from Berkshire to the Bill and Melinda Gates Foundation.
Does Bill Gates actually have anything to do with Microsoft anymore, though? I'm sure he gets some sort of probably personal kickbacks from
I have no
lifetime
idea
membership. But I mean, when you look at, say, the portfolio for his 13F, which is for the Bill and Melinda Gates Foundation, which I'm sure he has his own personal finances as well as the foundation's finances, but they don't touch Microsoft in that portfolio. But I'm sure there's still got to be some deep connection with Bill and Microsoft.
I'm not entirely sure. Charlie, during the meeting, may as well talk about this now, had a little bit to say on Activision Blizzard, not too much though. There was a question asking about who in the portfolio or who are the managers in Berkshire made the investment and what was kind of the thoughts behind that. He very quickly said like no comment on the bid. And then he kind of went on a weird ramble about the negative consequences of gaming, which I thought was kind of funny. He goes,
"Oh, right."
He goes, clearly he's not a fan of Call of Duty because he said, do you really want someone running around with a machine gun on TV for 40 hours a week? Which I thought was kind of funny. So I don't think he's a big fan of that, which is, I don't know.
He praised some games and then he kind of insulted a couple other ones.
Yeah. I don't know. His position on it is strange to me because his position is kind of that it is not productive for you. It kind of takes away from you being a productive person or whatever, and that it's addictive and it can take over your life. I don't know. You could make a lot of similar arguments, I think. Maybe not quite as similar, but to something like Coca-Cola, where it's just an addictive product, right? Which I personally have no problem with people drinking Coca-Cola. Obviously, do whatever you want, right? That's fine. A lot of people enjoy that and get a lot of joy out of it. But I could say the same thing about gaming. So I don't know. Yeah, kind of a weird position, I think, to take on that.
Yeah. No, I love video games. Let the people play. But yeah, it was kind of interesting how he was like kind of pressed on it, and he was just like, no comment. Like, maybe there is more to the story. I mean, I wasn't skeptical before, but now maybe I am skeptical.
And the position is sold, and the bid falls out.
Yeah, exactly. Yeah, exactly. That would be funny. He did put his he did put his foot in a little bit, didn't he, when he was talking about Bobby, what's his name? Bobby Kotick. Did you hear that?
No, what was he saying?
He was basically just saying, but I think Bobby Kotick is one of the best managers that I've come across in a long time, or something like that. I was like, Charlie, like, I get what you mean. You probably like he's turned some pretty good business performance out of the company, but the fact that he's like implicated in all of this like sexual harassment stuff, I'm like, just Charlie, that's probably not the way to phrase it.
Yeah, I don't think any praise should be given to the Activision Blizzard management team. So.
No. So I don't know. Maybe Munger might walk that one back, but he can kind of. I mean, he's an old dude. I can kind of understand that maybe he just meant that they've grown Activision Blizzard into a very large company, and from a managerial point of view, that's like, oh, well done. But at the same time, it's like, well, if you're someone that talks about being a good person and finding good managers that are nice people and respect, and that, it's like, well, maybe just don't say anything about that.
Yeah, he used to take much more. If you watch some of the old Berkshire meetings, he would be much more likely to just dismiss a question if he didn't have an opinion on it, or clearly he hadn't kind of thought deeply about it. Whereas in the more recent meetings, the Daily Journal ones, it seems like he tries and gives an answer on everything, which probably leads him to say things that he probably doesn't believe, or occasionally, not whether it's on that thing specifically, but just naturally, if you're talking about a lot of different topics, you're not going to know a deep amount on every single thing you talk about. So I don't know. I kind of liked Charlie in those meetings where Buffett just turns to him and asks, do you have any comment? He's like, no.
Yeah, just do that.
Yeah.
He stuck his foot in a little bit as well when he was talking about Bitcoin. No, we're getting a little bit off topic, and he was like, oh, I don't see why we need a new digital currency. We already have a digital currency right now. It's like, that's really showing that
it doesn't understand.
Yeah, exactly. But anyway, so more on Charlie Munger a little bit later. But back to Berkshire Hathaway's 13F. So yes, they bought Activision Blizzard, 0.29% of the portfolio, question marks over insider trading. I just don't think Buffett is that kind of person.
No.
I don't know.
Yeah, I guess not. I don't know. Who knows?
I don't know. But I mean,
no, he doesn't seem like that.
Because I made a video on this 13F already, and I didn't even think about that at the time. And now all the comments I'm getting are like, question marks over insider trading. I'm like, yeah, I didn't actually think of that. But anyway, that's the second buy, and then the third buy was New Holdings. Hamish, would you care to do a bit of a deep dive and just talk about New Holdings as a business and what you think their growth rates will be, and their debt management, their ROIC over the next little while?
Great company, amazing revenues currently, to be going up as well in the future. So significant growth coming from that business, market share to be captured, growing industry,
blockchain,
gold deposits,
digital consumer experiences, and growth.
Stock up soon.
Compound annual growth rate of the dividend, and also the return on assets.
That's good.
No, apparently it's just it is a Brazilian fintech like bank. Apparently they're just like a neo bank, kind of just offers various saving, spending, investing kind of products. Largest, what was it? Largest, damn it, I forgot already. It's like largest neobank in Brazil or something like that, but still 0.3% of the portfolio, which leads me to the point that I was going to make that we kind of already made before, is that I don't think that Warren Buffett did any of this.
Yeah. I mean,
I just don't think that he's dealing with 0.3% of the portfolio kind of positions. If you ask me, like I'll talk through from kind of the top of the portfolio, so the largest positions going down to the smaller positions. So our first change, so we got Apple, Bank of America, American Express, Coca-Cola, Kraft Heinz, Moody's, Verizon, US Bancorp, and then Chevron. Chevron is the first stock that there was any activity on. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, the ninth largest position. And then for Chevron, he added 33%. And then Bank of New York Mellon, DaVita Healthcare, General Motors, VeriSign, and then we get down to Kroger, which was the next reduction of 0.61%, so basically nothing. And then Charter Communications, a reduction of 9%. And again, then we have Liberty Sirius XM Series C, Snowflake, Amazon, and then we get down to Visa and MasterCard where there were slight reductions there. But honestly, there's nothing like, besides the Chevron adding 33%, I don't think Buffett really did anything.
No, probably not. I mean, I think from time to time he does put a little bit in some businesses, and then, I guess if they came down in price, he would build out a complete position in them. But a lot of the time that doesn't happen. But yeah, of course, it's very likely that it wasn't Buffett making these moves, or I don't know. But everyone's kind of always even watching these small moves because everyone wants to see early what might be something that becomes a really large position, but I guess he's probably likely to be very quiet about building a massive position in a company anyway. He's unlikely to kind of go slowly or buy a little bit of it to give people a hint that he's looking at it. He's probably more likely to reach out to the SEC and say, hey, can we stop disclosing for a little bit? I'm going to buy 20% of the company.
Yeah.
So... yeah.
Maybe he's also learnt a little bit, because you remember how there was the quarter before the Berkshire Hathaway meeting, not last year, the year before, 2020, where he did a whole bunch of buying and selling. And then the questions in the meeting were just like, you just did this, you just did that. So maybe he's just like, you know what, maybe the Q4 13F, the one that gets released right before our annual meeting, maybe I just won't do anything. Just if
no
I can
trades.
help it.
Yeah.
I'll do everything I need to do in the next quarter.
Yeah.
So I don't get asked about it.
That's probably it.
Yeah.
I mean, in terms of other 13Fs, there wasn't really any. I looked through a bunch of them and there really wasn't anything too exciting.
It was dry, wasn't it?
Yeah. I mean, even Bill Ackman's investment in Netflix was made Q1. Too late. So we don't even see that yet, which is interesting because a lot of the time these investors want to not disclose their position as long as possible, whereas Bill Ackman just disclosed it as soon as he didn't even need to disclose that he had invested in it, and he told the world about it. But I mean, Burry, basically, I mean, every quarter he changes his whole portfolio. One month it's stock options, the other one it's put options, and then the next month he's got pharmaceutical companies, and then he's investing in.
I don't quite understand his portfolio. I mean, he's like he has the value mindset, but he's also extremely short term.
Yeah, I don't know. That man is a mystery. He's a mystery. He's an enigma. Isn't he? But I mean, everything he does is like that. I mean, his Twitter activity is like that. It's like 1 month he's there, 1 month he's deleted everything.
Yeah. It's true. Yeah.
Anyway, so his new portfolio for the quarter, but yeah, basically sold down everything. And then he has like 4, I think, major positions. 3 of them are quite big and then one's a bit smaller. Bristol Myers Squibb is one that he invested into. It's a pharmaceutical company. Fidelity National Finance is an insurance settler and residential lender. General Dynamics, aerospace and defense business. There was also he added to a position that he already had, which he kept, which was a private prison business, I think, or something like that.
Right.
So that was kind of the other big position. And then there was a smaller one in a SPAC. So he's into it's kind of ironic.
He's getting into the SPACs.
Surely he said something negative about SPACs over on Twitter before. I can't imagine he hasn't. But anyway, he's now in a SPAC. The SPAC is called AEA Bridges Impact. And
has it bought something yet?
It has. So it's a deal with Harley Davidson. So Harley Davidson has an electric vehicle subsidiary called LiveWire. And Harley Davidson's going to be spinning that off into its own public company. So an electric motorcycle startup, basically. And that is what it's going to be done through the SPAC.
So the SPAC is going to buy the LiveWire off of Harley Davidson.
Yep, and then take it public, essentially.
That's how it's going to become public.
Yeah, so I guess it's not like most SPACs where most people are buying into a SPAC before they even know what is being purchased, like Bill Ackman's Pershing Square Tontine Holdings or whatever it's called. A lot of people invested into that very early before it had even bought anything. I don't think it still has bought anything. A couple of deals fell through. But yeah, so I guess it's a bit different in that respect. You kind of know what you're buying and you know what price you're paying. So you can make some, analysis there, but it is a startup. So it's very early stage. But yeah, I don't know. I don't think I have too much special insight into Burry's portfolio. It's always a question mark for me. When he had options on Facebook and Google, it was a little bit closer to home, but it
was a bit spicier.
Yeah, a little bit more understood. But yeah, and I mean when he had those bets against the Treasury bonds, all of that kind of made sense. Made sense. This I don't know.
Nah. This is confusing.
Yeah. Is he back on Twitter? Is he?
Nah.
No, he's
well, I checked a little while ago and he wasn't. I don't think he would have come back.
I just love the deleting of everything.
He's a loose cannon.
But
he does what he wants.
It's still there. I mean, there's just archive Twitter pages. So it doesn't do anything. Like, why not just leave it?
Yeah,
you know
exactly.
What I mean?
It'd be easier for us to go and find his old tweets too if he just left it there.
Even he tries to delete them like 2 hours after he's posted them, and they're still saved. They're never lost.
Yeah, he doesn't quite understand that what you put on the internet stays on the internet.
Yeah, he hasn't quite got that. Yeah.
Yeah. But yeah, there you go. What happened with Monish Pabrai? I saw Guy Spier added a little bit more Alibaba. I'm guessing Monish Pabrai did not.
Have you seen the interview Tom did with Guy Spier?
Yes, I did. I watched through that yesterday. That was amazing.
Yeah.
And Tom, if you're watching, congratulations, dude. That is an absolute epic thing to have done and to have achieved. Yeah. And I think it's a testament to the content that Tom makes as well. That like there's no way Guy Spier is agreeing to go on like Financial Education or Graham Stephan channel or something like that. But I think that really speaks quite highly of the content that Tom makes on his channel. So no, well done, Tom. Well done. Absolutely.
Mate, if Guy Spier went on like Meet Kevin or something, it would just be so ridiculous. Just like the start of it would be like, just before we get started, Guy, if you've gotten your life insurance, make sure you use my referral link down.
Yeah, exactly. Yeah.
It's just horrible, but yeah.
And sign up to all these different affiliates for a million stocks when you fund your account.
No, but that was great. Yeah, that was fantastic to watch. But yeah, I mean, in terms of Monish, he closed out his Bubba position, so he's out at least from the what's it called, the one listed on the New York Stock Exchange. He might hold one overseas, but I don't think he does. Not from what he said, at least in recent interviews. And yeah, he only has 2 US positions now. So he has Micron and Seritage. So that's all he has on the US market, and we don't get to see anything else, at least given the size of his positions in other places. We know he has his Turkish real estate business, commercial real estate business, and his investment in Prosus, which is kind of a way to get into Tencent. But yeah, we don't get to see too much more of Monish unless he gets back into some American companies. But that's the case with a lot of big investors at the moment. There's a lot of people looking outside of the US for investment opportunities because there really isn't all that much in the US at the moment. I think it's fair to say.
Pretty hot in the kitchen in the US. It's very expensive. But yeah, no, you're right. That is a general sweeping trend that all of these big name investors, you see more and more like Chinese holdings pop up. Monish Pabrai's got like Indian and I think Turkish.
That's right.
That kind of stuff. So, very interesting. And one resource that I will just note, I don't know if you use this one, ticket.com. Do you use ticker.com?
Oh, Ticker. Yes. Yeah.
So Ticker is if you want to try and get like the most complete. So 13Fs are just what they hold in the United States. If you wanted to try and get the most complete look at their portfolio, including everything, then ticker.com is a good way to do it.
Ticker.com /Hamish Hodder.
Do you have an affiliate? Are you an affiliate of theirs?
Yeah.
Oh, there you go. But yeah.
You can't go to ticker.com. It doesn't work. Yeah, it doesn't work anymore. You have to go through ticker.com /Hamish Hodder. It's
really?
It's just, I don't know.
Website's
weird thing. Yeah. I don't know why it's
Hang
like
on,
that.
let me try.
Yeah.
Ticker.com.
I mean, I just try. You don't have to try it. It doesn't.
Oh my gosh! No, I just tried it, and you're right. It says. It says it's come up with a Google thing. Did you mean ticker.com /Hamish Hodder? I guess I did mean that.
Yeah.
Oh yeah, now it works. Yeah. Anyway, so that's Burry, Monish, Guy Spier, Buffett. They're the 13Fs, eh?
Yep, that's it. I think that's all we've got. Well, let's get into some Daily Journal Charlie Munger action, because he spoke about it. I don't know where you want to begin. You've got quite a bit here, so maybe you take us through. Maybe we can
back and forth. I mean, it's just kind of a collection of things that stood out to me that maybe we've been talking about related to Charlie Munger or value investing over the last little while. So, for example, at the start, and because he's just answering questions, of course, the questions are going to kind of generally trend towards current events. So, for example, he was asked about his investments in China, and Munger says he's very comfortable having his investments in China. Some people were in their question saying, I feel uncomfortable investing in China. And he's like, okay, each to their own. If you don't feel comfortable, then don't do it, which is, of course, very sound advice. But, it's like, I think one of the quotes was, it's like, he feels like investing, how do I say it? His feeling on, say, investing in Russia is how a lot of people are viewing like investing in China at the moment. Just like they feel a little bit scared, but he personally is not concerned. His general overarching argument was that at the end of the day, the best outcome for all nations is to just get along with each other. So in terms of like CCP and American delisting and that sort of thing, it's just like the best outcome is that all nations get along with each other and business is allowed to flourish. So he thinks that will happen. Yeah. And so that's kind of his backbone for saying, I am comfortable investing in China, and he sees this stuff as long-term investments. So it's like, even there might be bumps along the road, but he's staying strong and going long. Yeah. And he's at the end of the day, he just said at the end of the day, the main reason he's buying in China at the moment is quite simply he's finding better value in China. That's the number one thing. He's like, he was being asked about, Chinese government. So he's like, the way I see it is we've bought into Alibaba just because we're finding better value there at the moment. Yeah. We feel like we're getting more bang for our buck. So that's what we do. We're value investors. That's what we try and find. We've found it, so we're grabbing it. Yeah. Yeah. I mean, I generally agree with the idea that obviously we want nations to get along with each other, but I think it's fairly reasonable for one nation to still point out if another is doing something that's pretty morally terrible. I think that's a reasonable position to take, because I don't know, I don't see it as, obviously you want a country to look after your own people first. I think that needs to be a priority. But then I still just see people as people, no matter where you are around the world, and, whatever's going on, whether it's the Uyghurs in China, that stuff really bothers me. And it's interesting to hear, and look, I'm no expert obviously, but it's interesting to hear that clearly Buffett has a very, very different opinion to Munger on China. Buffett does not invest in China, and we don't really know, what his deep opinion on that is, whether it's from a moral perspective or whether he doesn't find investments there, or whether it's the risks of regulation or whatever it is. But interesting to see that they have kind of different opinions on that. So yeah. Yeah, so that was China. he got asked about cryptocurrency. You can imagine what he said about cryptocurrency. He's actually done a 180, and he said that he's sunk the majority of the free cash of the Daily Journal into Bitcoin, Ethereum, and Shiba Inu.
Yep. If you can't beat him, join him. So.
Yeah, exactly right. No, he's definitely not changing his tune on cryptocurrency. His general opinion is he feels it shouldn't be encouraged as it gets implicated with crime a lot. He said he's proud of China for banning it, and he thinks the US should have done so. And now that they're trying to integrate it, he thinks is the wrong move. So. We will see, but I mean, it was also pretty clear that he didn't quite understand the full kind of, inner workings of the block. I'm not saying that I do of the blockchain, because I definitely don't. But like I said before earlier in the podcast, it's just like a couple of little things he said which kind of showed that he didn't quite understand the differences in the way that the system works. He's certainly just. He's certainly just not going to buy it ever. Yeah. So I think people should just stop asking him.
Yeah, it is kind of funny, not that it's necessarily the exact same thing, but it is funny to watch interviews of people with their doubts about the internet back in the early 90s. Yeah. And one of the big pushbacks, and early 2000s even as well, was that there was so much crime that was being enabled by the internet. Like all of a sudden you had, before there was all these checks on chat rooms and messages and that sort of thing online, which now there's a lot of regulation around that. Before, it was kind of this new way to connect where you didn't have to use and go through a telephone company that was regulated by the government, and people, committing crime had to be careful, how they were communicating through there. So it's interesting to hear that, and obviously there was a huge amount of people pirating movies and games, and it still exists obviously today, but to a significantly less degree than it did when the internet was just the Wild West. But it's interesting to hear that as an argument. I don't think that argument holds all that much water against cryptocurrency. I think that's going to be the case with any new technology or anything new that hasn't been fully regulated yet, where the laws haven't caught up to the tech. So I don't know if I care too much about that as an argument against cryptocurrency.
Fair enough. In terms of inflation, it was interesting. This is what you were talking about before, how he remembers so vividly the events that have happened a long time ago in his own personal history. He was talking about how he remembers the recession that followed the high inflation of the 1970s. And he said, he really hopes that we don't go back there. He described it as a very horrible recession. In hindsight, he says he still thinks it was the right move for Volcker to raise rates so steeply as he did, which did end up controlling the inflation, but also caused the recession. But he isn't sure the political environment would allow that kind of decisive action again. Which would cause such a nasty recession. He just doesn't think that would work politically. He just doesn't think that would be possible. So thus he thinks that this time round it will play out differently, but he doesn't know how. But he did say, and I quote, this is kind of crazy, you may wish you had a Volcker-style recession instead of what we're going to get. The troubles that come to us might be worse than what Volcker was dealing with and harder to fix. So I don't think he's particularly optimistic about the future of inflation and interest rates and whatnot.
Yeah, it sounds like he has a position much like Ray Dalio's, which is Ray Dalio thinks the exact same thing. He thinks that governments are much more likely to devalue the currency than just offload some of the debt and get that debt down and get it under control. They're much more likely to let inflation run than fix inflation and hurt the economy in the short term as a result of it. So it's interesting to see, because that really is the inflection point we're at. It's whether the Federal Reserve will think independently from what the government wants, because the government's always going to be whispering in the ear, whoever's in power of the Federal Reserve, to get them to do what they want, but whether they want to spend more or whatever it is, right? So whether the Fed will act independently and then what they will do. I don't know. Yeah, we really don't know what's going to happen. But yeah, maybe they will be scarred from the what happened in the 1970s. But at the same time, it's kind of a good example of what happens when you don't get inflation under control, and then how devastating it is eventually when you do what is necessary, which is raise interest rates. So yeah, I'm certainly of the opinion that I want the Fed to get on top of inflation before it gets out of control. And the last year and a half, they have just continued to kind of cross their fingers that things, transition into a low inflation environment. But yeah, I don't know. Maybe that happens, but they are banking on it. And if it doesn't, it's they're going to need to do some sharp interest rate increases, I would think. So
they won't be very popular.
No. Well, they're not going to be popular either way, I think.
No,
I mean, they let
not.
inflation run and everyone's wondering why their rent is going up so much and why groceries are so expensive. Yeah. And if they raise interest rates, everyone loses their job. You can't win. I mean,
that's true.
It's just the it's the unfortunate physics of money, the consequence. It's like the equal and opposite reaction to spending a bunch of money, which we had to do to save people out of the pandemic. It's just an unfortunate, there's not always a good end. We kind of saved a lot of pain in the pandemic, but I think a lot of that pain will probably still come in a different form. And that just is unfortunate,
Yeah. Reminds me of the Ray Dalio quote, where it's something like, because we have debt, we have cycles. And it's like, you can't avoid it. I mean, if you give money to people at a certain period of time, you then have to take money away from people at a different point in time. So it's swings and roundabouts. It all has to balance out. It all has to work out eventually. But I like how you described it as the physics of money. You're not wrong.
I don't know who first said that, and it just clicked with me. But it is absolutely true.
Yeah.
I think, and I mean, it's true for physics as well. I mean, there's physics in the real world versus in theory. There's obviously more factors than the basic kind of 3-term calculation that you would do, when you were doing high school physics, right? High school physics, it's nice. It's a nice vacuum. It's like a force this way, a force that way. There's no air resistance. It's very nice and it's very clean, right? But in the real world, obviously, it's not as clean. There's more factors. And the same thing is true for economics. There's people who will read university economics and just live by that, but that's just not how the world operates. I mean, generally speaking, it's a way to kind of track how things change over time, but there are way more factors than that, and it's not something you can reasonably predict. But yeah,
is there anything else you took out of the meeting?
I mean, there was one very interesting one right at the end. I think it was the last question. He was asked about whether he had an investment that was a dog. I think she referred to it as, so like a really, a bad investment.
Oh, yeah.
And he spoke about Berkshire's investment in the World Book Encyclopedia, which Berkshire was apparently making $50 million a year on that business, selling those books. Obviously, before the internet and computers, that was an amazing resource. Who could have seen that? No one could have seen that coming, though, unfortunately. And he spoke about how Bill Gates included a free encyclopedia on Microsoft's computer software, and the business was just basically wiped out. And that he said they still made a couple million selling them to libraries and schools. But yeah, and it was just an interesting case study because he was, kind of saying that's the ruthlessness of capitalism. There will be an invention that you don't see coming, and it will completely wipe out a lot of businesses, businesses that you couldn't imagine would ever get wiped out. So yeah, it's just a kind of interesting case study. He went on to talk about in the kind of same thought about how he doesn't believe that TV programs, and I guess he's talking about like just education through the internet. He doesn't believe that it's as good as the World Book Encyclopedia. He said that the book helped him get ahead in life, and that it's basically much better than what's available now. I don't think I agree with that. What I think he's kind of describing is the fact that, I mean, I certainly don't think online education is worse than a book that can't change, can't be adapted if something is found to be not true or anything like that, right? It's just kind of a stagnant book. Maybe you get one a year. There's no live updates to that. And it's limited by the pages of the book as well. So I think clearly online, access to information online is much greater, but it's also more accessible to more people. So I think it makes the environment for getting ahead in life much more competitive than it was previously. It's kind of similar to, if you just think of it, you can kind of have a similar thing when it comes to investing. When Buffett was younger, clearly the markets were less efficient. There was less people investing. There was less publicly available information. So stocks were more likely to be mispriced. They were more likely to be overvalued or undervalued for long periods of time, which is what you want as a value investor. So clearly it was easier to find opportunities when Buffett was younger. But on the other side of the coin, there was no internet. So it was only really easier for people who would go to extreme lengths like Buffett to get the information on companies in order to make rational decisions. And now the opposite is kind of true. Markets are much more efficient. There's way more people watching the markets. And we have access to the internet, which means pretty much all publicly available information, even some private information will leak publicly immediately. All of that is available, which makes research really easy. So the tools available to invest are much better now than they were back then. But because everyone has those tools, it's very competitive. So I think the same
closes the gap. Yeah,
I think the same thing applies for education. I think there's much better education tools now than there were, but everyone has access to them. The bar is so low to improve yourself that it's very, very competitive. So it's kind of a give and take, I think,
it's interesting.
of over time. Yeah,
I find that interesting. That's good. What else? What else?
Yeah, there
politics. He always has a little bit to say on politics. He said, interesting. This is a interesting example. He thinks it's a great loss that all of the old kind of regional newspapers were either acquired or put out of business. He said, now you have either left wing or right wing news, and they just feed you what you want to hear, which increases the divide. So quote, what do we have instead? We have a bunch of people who attract an audience because they're crazy. I have my favorite crazies and you have your favorite crazies. And we all get crazier as we hire and we all get crazy as we hire people to tell us what we want to hear. It's nobody's fault. It's just the creative destruction of capitalism. But I do find that is so true. I mean, just the fact that, there used to be a lot of independent media and news companies that all there was some local ones, and then slowly but surely they all get bought up or they get put out of business. And now you have basically all media, all news is either left-wing focused or it's right-wing focused. And the reason it's gone like that is because that's what's most profitable. You've got half the people, well, I don't know what the stats are, but let's just say half the people in the world that think slightly more right-wing, you have half the people in the world that think slightly more left-wing, and you get an audience and you grow a following by, having an opinion and attracting people who share the same opinion, and that's just the way that news has gone. And he says that that's a very sad thing, but that's just how capitalism works. And he says that he doesn't know what to do about it. Now we've got the media situation just increases the divide. Now it's like most people back in the day wouldn't give 2 cents about politics. They just wouldn't care. Now everybody has a political opinion, and the divide between political opinions is enormous. And it just gets fed by the media. So I thought that was a very interesting thing that he brought up. But he says it's very sad that, all of the independent kind of perspectives on the world have eventually been acquired and fallen underneath a couple of big names, and that's kind of sealed the deal on what bias their content will have.
Yeah. And he also spoke about how when he was growing up and after the Second World War, it must have been, how everyone in the US kind of came together in solidarity, and there was much more of the two political parties were much closer together because it was kind of like everyone had a common enemy in a way, right? And everyone had to come together. And that's kind of shown in the data as well. The political parties at the time were there was much more overlap, whereas over the last 40 or 50 years, there's just been a consistent widening of those two parties. And yeah, I don't know what the fix of that is, but it's getting worse. And it's even the last 5 years, let's say, I've probably paid the most attention to politics. You can notice that it is getting worse. People are really digging their heels in. Everyone has a deep opinion about at least some issue, and it's very strange to watch people just having strong political opinions when I feel like a lot of people don't look at politics and study those topics very much. It's almost like the internet has given everyone the opportunity to read a headline and come up with an opinion without, I don't know, where before maybe they wouldn't have even thought about those things. So I don't know. It is very strange to watch. I don't know. I don't know what to think of it.
What can you do? Yeah.
I don't know because I find because you posted something on Facebook this morning about this as well.
Yeah, I was inspired by what Charlie was talking about.
And I wish more people would think like that because, and what Brandon basically said was, why do people dig in to being on a side? Like, why not just take in the facts and pick an opinion? And if it means you fall a little left, if it means you fall a little right on one issue, who cares? Like, I think some people are so afraid. This probably goes both ways, but it definitely goes both ways, actually. But some people are so afraid of agreeing with the right or agreeing with the left on an issue. You know what I mean? Like,
true,
there's people who are terrified of it. It's almost
I can't be seen.
Yes, and that is sad because then you're no longer thinking rationally. You're thinking in tribalism. My tribe must win at all costs. And even if we're wrong on this issue, we're right mostly. So
we need to fight the wrong thing.
So I will agree with the wrong thing in order to win.
Yeah.
And that's just ridiculous. I tend to I fall, as I've said, I probably fall a little bit more right economically. I definitely fall more left socially with social issues.
Yeah.
Who cares? Like, you know what I mean?
Yeah.
Like, everyone's different. Everyone has different experiences. If you've experienced something, then you're far more likely to have a strong opinion about that thing in one way or the other. I don't know. I
remember doing...
Yeah, go on.
Sorry, you go.
No, I was just going to... Maybe most people are probably like that, and you just see the loud extreme online. But I like to think that most people are rational human beings who don't pick sides.
Yeah. My post, if you guys are interested, I'll read it word for word. It says, unpopular opinion, you should not be right or left, and you should not be a Labor voter or a Liberal voter. They're the two major parties in Australia. You should instead suppress confirmation bias and gather the facts of both arguments to make an unbiased decision based on your own values. That is how I stand. And I'd be interested to hear, whether you agree with that, whether you could build on that, leave a comment. It's very interesting. But with that said, I think we'll wrap things up because we're already crossing past the hour mark. Oh, we thought we were going to get to lots of Q&A today and we got to none.
Oh my goodness.
So that was pretty crazy. But we touched on a lot of very interesting topics. I feel like actually like looking at each other actually helps us just keep going.
Yeah, I agree.
And go deeper into things, which is actually interesting. So it's a little bit of a different change, but hopefully it's for the better. But we will get to more Q&A questions next week. So if you have a question you'd like to ask for the podcast, just head over to YouTube and click on the most recent podcast that's up there. Head down to the comments section and just leave your question in the comments. And as I say, we just grab them all, we just chuck them in the Google Doc, and then we just go down through them. But apart from that, guys, that'll just about do us for today. Thanks very much for watching. or listening. Maybe we've convinced you, if you're normally a listener, to maybe go and give the YouTube version a bit of a try, because we hope to do the filming from week to week from now on. I'm sure we'll still do live podcasts and they'll still be a lot of fun, but with you in Melbourne and me in Canberra, we'll try and film ourselves and keep the podcast videoed for YouTube. But anyway, with that said, guys, we hope you enjoyed it, and we'll see you guys next week.
See you guys.